Let me ask you something straight up. How many times have you watched a stock run up 200% and thought to yourself, I knew about that company. I looked at it. I just didn't pull the trigger. That feeling right there, that's exactly what we are here to prevent today. Because right now in this market, there are 3 stocks sitting in a position that I haven't seen in a long time. And if you're serious about your money, about your future, about actually building something real, you need to hear what I'm about to break down. Stay with me. This is Smart Market Signals, and the next 11 minutes could genuinely change how you think about your portfolio. And before we get deep into the names, if you're not already subscribed to Smart Market Signals, do it right now. Tap that subscribe button, hit the bell, because we cover real opportunities backed by real fundamentals. No noise, no fluff, just the kind of macro analysis that actually helps you make smarter decisions. We're growing fast, and you don't want to miss what's coming next on this channel. Now, let's set the stage because context matters more than most people realize. The broader market has been doing something that honestly surprised a lot of professional investors. After months of rate fears, inflation anxiety, geopolitical chaos, the S&P 500 has been pushing higher. Earnings estimates are climbing, and certain pockets of this market are showing momentum we simply haven't seen in years. Retail investor enthusiasm is surging, and daily call option activity from everyday investors just hit some of its highest levels in months. People believe prices are going higher, and in specific cases, they are absolutely right. But here's the challenge, and this is what separates real investors from people just riding hype. You have to know which stocks have genuine substance underneath that excitement and which ones are just caught in a sentiment wave. That's what we do here. We dig into revenue trajectories, earnings per share growth, operating trends, and long-term business models. So, let's go. The first stock on today's deserves to be at the top of this conversation. Advanced Micro Devices, stock ticker AMD. And I know what that feels like if you're watching it. It feels like the top might be in. It feels like maybe you missed it. But let me give you the full picture, because the full picture tells a very different story. Over the past 5 trading days, AMD is up approximately 10%. Over the past month, the stock is up over 60%. And on a 1-year basis, we are looking at gains well over 200%. So, what you are seeing right now is the wall of fear inside one of the most powerful uptrends in the entire semiconductor space. Here is the fundamental story that makes AMD one of the most important names to understand right now. AMD is no longer just a traditional chip company. It has positioned itself as a direct competitor to NVIDIA in the AI accelerator market, which is arguably the single hottest segment in all of technology. The data center business has become an enormous growth engine, and the runway ahead is genuinely long. We are talking about a multi-year build-out of AI infrastructure across every major cloud platform. Companies like Amazon, Microsoft, Google, Meta are spending tens of billions every single year on AI compute, and AMD is capturing a growing share of that spending. And as that share increases, so does revenue, so does earnings, and so does the stock price over time. I cannot tell you where AMD will close tomorrow, let alone next week. Nobody can. But over the next 3 to 5 years, based on where earnings are heading and the trajectory of the AI infrastructure cycle, the path for this stock is dramatically higher. Analysts' price targets are in the hundreds of dollars. Some of the more aggressive long-term models go well beyond that when you factor in what earnings could look like several years out. Any pullbacks in share price are just noise against that backdrop. Drop a comment right now and let us know if you are already in AMD or are you still watching from the sidelines. I read every single comment on this channel. Stock number 2 requires you to set aside some of the negative press you may have been seeing lately. The company is ServiceNow, ticker symbol NOW. If you are not already familiar, ServiceNow is a cloud-based software platform that helps the largest enterprises on the planet manage and automate their internal workflows. IT requests, compliance processes, employee operations, business workflows, all of it running on one deeply integrated platform. And here is the key thing you need to understand about this business. Once a massive organization is embedded into ServiceNow, they are not leaving. The switching costs are enormous. You do not just rip ServiceNow out of a company with 50,000 employees and replace it overnight. That stickiness is one of the most underappreciated competitive advantages in enterprise software. And it is the foundation of this company's compounding growth story. Now here's the AI angle, and this is where I think most mainstream financial commentary is getting it completely backwards. People hear the words software as a service and immediately project doom. They assume AI is going to disrupt and destroy these workflow companies. That thinking is fundamentally wrong when applied to ServiceNow. AI is not a threat to this business model, and instead is actually the biggest accelerant ServiceNow has seen in years. They are embedding artificial intelligence directly into their platform in a way that makes their tools dramatically more powerful and more sticky for enterprise customers. Faster task resolution, better predictive capabilities, deeper automation, all of it driving more value for clients, which drives renewals, expansions, and new contracts. It is a compounding cycle, and it is still in the early stages. ServiceNow's AI-related revenue streams are still relatively small as a percentage of total revenue, roughly $1 billion from AI-enhanced product lines. That sounds significant, but relative to the total opportunity in front of this company, it is just the beginning. A segment generating $1 billion today could be generating $5 to $10 billion or more within a decade. The stock has faced selling pressure because investors are nervous about long-term AI competitive dynamics in software. But investors who understand this business deeply, who understand that enterprise workflow software is becoming more entrenched, not less, they see a genuine opportunity in this fear-driven pricing. If this analysis is adding real value for you right now, hit the like button. It takes 1 second, it costs you nothing, and it genuinely helps smart market signals reach more people who are trying to make smarter decisions with their money. Share this video with someone you know who's been asking questions about where to put their money right now. Every share helps this community grow. The third stock on today's list is probably the most misunderstood company in this entire conversation. Adobe, ticker symbol ADBE. If you have been following financial media, you have heard a relentless wave of negativity around this name. The narrative has been loud, and it has been consistent. Adobe is being destroyed by generative AI. Image generators, video generators, all of these AI-powered creative tools are going to make Photoshop obsolete. Creative professionals won't need Adobe anymore. Let me tell you directly why that narrative is dramatically overstated. The vast majority of Adobe's revenue does not come from individual freelancers or hobbyists who might experiment with a free AI tool. It comes from large corporations, Fortune 500 companies, advertising agencies, media companies, and enterprise marketing departments. These organizations have deeply embedded Adobe workflows, touching thousands of employees. IT integrations, training infrastructure, compliance requirements, production pipelines, all of it built around Adobe's ecosystem. For a major corporation, Adobe licensing is a tiny line item. The operational disruption of replacing it would cost far more than any potential savings from switching. These corporate clients are simply not going anywhere. And Adobe has not been sitting still. They have been aggressively integrating AI into their own product suite through Adobe Firefly, and the AI capabilities now embedded across Creative Cloud, Document Cloud, and Experience Cloud. Adobe is not fighting the AI wave. It is riding it using artificial intelligence to make its products more powerful and more valuable to existing customers. There's also a signal in the market that does not get enough attention. When OpenAI paused Sora, their video generation tool, citing development challenges, it was a reminder that the path from AI research to production-ready enterprise software is much longer and more complicated than the bear case assumes. Adobe, meanwhile, keeps shipping product, keeps growing revenue, and keeps compounding. Now, let me pull back and give you the framework that ties all three of these names together because they share something critical. AMD, ServiceNow, and Adobe are all companies that the market is currently pricing with a fear discount. Fear about disruption, fear about competition, fear about the pace of technological change. And here is what decades of market history tell us about fear-discounted, fundamentally strong businesses. They tend to be exactly where the best long-term returns come from. Think about Amazon during the dot-com crash. Think about Apple after the iPhone launched, and conventional wisdom said the smartphone market was already saturated. The pattern repeats itself over and over again. The market gets scared. Valuations compress. Fundamentals keep building quietly in the background. And then the narrative shifts and the stock reprices dramatically higher. For those of you who are serious about building and protecting real wealth, not just chasing short-term excitement, I want to be direct about something important. The surge in call option buying we are seeing from retail investors right now is not a strategy. When a call option expires worthless, that money is gone. There's no recovery. There's no waiting for the stock to come back. Compare that to owning actual shares of AMD, ServiceNow, or Adobe. If the stock drops 20%, that is painful in the short term, but you still own the underlying asset. You can wait, and you can add more at lower prices. The asymmetry outcome is completely different. Owning shares of fundamentally strong businesses is the approach that has proven itself decade after decade for investors building toward retirement or protecting wealth they have already accumulated. Here is what gives me confidence about the long-term direction of this market and these specific names. The AI infrastructure build-out is continuing at a pace that keeps exceeding supply. The major cloud companies are not slowing down their capital expenditure plans in any meaningful way. When you have Amazon, Microsoft, Google, and Meta committing to hundreds of billions in AI infrastructure spending over the coming years, that spending flows through to companies across semiconductors, software, and data services. AMD benefits directly, ServiceNow benefits directly, and Adobe, through its enterprise software dominance, benefits from the broader acceleration of digital transformation. All three of these stocks are going to have rough stretches ahead. AMD has had corrections of 40 to 50% in its history. ServiceNow has had brutal drawdowns, and Adobe has had painful stretches. Every great long-term compounder in the history of the stock market has gone through periods where the thesis looked broken and the headlines were terrible. And then the business kept growing, earnings kept compounding, and the stock climbed to new all-time highs. That is what it actually looks like to build wealth through equity investing. It is not a smooth ride. The investors who built real wealth in Amazon or Apple did not do it because they timed every trade perfectly. They did it because they owned the right companies and held long enough for the fundamental value to be fully recognized. AMD at current prices, ServiceNow with its AI growth inflection just getting started, and Adobe with its deeply misunderstood and undervalued business model. These are the names worth putting serious research time into right now. Share this video with anyone in your world who has been trying to figure out where to put their money. Drop a comment below with the stock or sector you want us to cover next. Your suggestions directly shape what we break down on this channel. And if you are not subscribed yet, do it right now. But if you believe in using this framework thesis, it makes a great way to get rich without getting lucky. And if you want to see what else I'm buying to get rich without getting lucky, consider checking out my next video. Thanks for watching, and until next time, this is the X-Invest Hunter. My name is Martine, reminding you that the best investment you can make is in you, and that you only need to be right one time to change your life.